Welcome back to TaxTank Tutorials. In this video, we'll guide you through every step of the onboarding checklist to help you swiftly and effortlessly get started with TaxTank. In this example, we've registered as an individual and chosen all income types, so we can show you through all steps of the checklist. Once you land on the dashboard, you'll notice on the left-hand menu icons for the property tank, work tank, sole tank, and holdings tank. Additionally, you'll see icons for spare tank, bank feeds, tax summary, and reporting, some of which we'll explore in today's tutorial. Keep in mind that you'll only see tanks and checklist steps relevant to the incomes you've selected, so feel free to skip any irrelevant sections in this tutorial. Our first checklist item is adding work tank forecasts. When you select this step, you'll be directed to the Work Tank Forecasting tab, where you can add PAYG incomes and forecasts for various other income types. To begin, select your tax residency and fill in the fields with your employer's name, annual income amount, pay frequency, and whether you qualify for the tax-free threshold. If you only have one job, the tax-free threshold will apply. However, if you have more than one, the tax-free threshold typically applies to your largest or longest held employment. Click Add to continue, and of course add any other PAYG incomes you might have. Once you're done, move on to the Other Income section and enter forecasts for any additional incomes you expect, such as PSI income, bonuses, director fees, interest, income from partnerships, pensions, or trusts. The fields will vary depending on the income type you choose, and you can edit these details later, so estimations are perfectly acceptable. Let's add some examples for bonuses, bank interest, and trust. Once you've completed this section, click Get Started to proceed to the next step, which, in this example, is adding your properties. Click here to open the Add Properties pop-up. Start typing your address in the Street Address field to prompt a search and select the correct one from the provided list. Next, choose the relevant portfolio from the drop-down. The portfolio selection is based on ownership structure and property use, including options for investment properties, properties shared for letting, trusts, and a special portfolio for land to capitalize expenses during the holding and build phase. Enter your ownership percentage, contract date, settlement date, purchase price, and estimated current market value. Next, complete the income and expense fields to create a forecast. For investment properties, you can find these details on the property schedules in your most recent tax return. If you have multiple properties, use the Add Property button at the top to continue adding properties. Click the blue Add Properties button when finished. The next step is to select your growth forecast percentage. By default, you'll see the average growth percentage for houses and units from CoreLogic based on suburb statistics. You can adjust the percentage to match your expectations if you feel your property is better or worse than the average. Click Apply once you've made your selection. Now, the Property Tank dashboard will populate with the portfolios you've selected and the properties added to each portfolio. You can continue adding more properties, or if you're finished, click Get Started to move on to the next step, which, in this example, is the Sole Tank. Similar to the Work Tank, the first step in the Sole Tank is to add your business details. Enter your ABN and indicate whether you're registered for GST. Provide your business name, select a business activity, and add a brief description. Then, add details of any prior year losses, forecasted business profit or loss for the current year, and any PAYG installments you expect to pay throughout the year. You can update these details later, so rough estimates are perfectly fine. If your business is a primary production business, check the box at the bottom to ensure accurate reporting in the business schedule, and then click Save. You'll see the sole tank header with the business you've just created. If you have multiple sole trader businesses, continue adding them before clicking Get Started to proceed with the checklist. The next checklist item is adding any holdings in the holdings tank. In the holdings tank, you can include shares, cryptocurrencies, or other non-listed assets held in your name or other entities. This allows you to track your total portfolio value, which is updated daily, and auto-calculate CGT when assets are sold. To start, click the Add By button, select your asset type and ownership structure, and then search for the asset by typing its ticker or name. Keep in mind that all currencies will be converted to Australian dollars if you choose shares in a foreign exchange. Continue filling out the remaining fields and attach a copy of the BUI statement for safekeeping. Note that the contract date is crucial for calculating available CGT concessions if you sell all or part of the purchase later. Continue to add all your assets. When you're ready, click Get Started to move on to the next step, which, in our example, is bank feeds. TaxTank is open banking approved, giving you access to over 180 banks and institutions. However, some non-bank lenders do not offer live feeds yet, and we'll cover adding them manually in a separate tutorial. To add a live bank, click Add Bank to open the bank selector pop-up. Search or scroll to find your bank and click on it to continue. The first time you add a bank, you'll see a pop-up displaying the read-only information collected to bring you live bank feeds daily. Once accepted, you will be redirected to your bank login to provide specific details based on your bank's requirements. Next, select the bank and loan accounts you want to link for live bank feeds. Check the relevant boxes on the left and then select the corresponding tanks. Depending on the tank selected, additional fields may appear. For instance, if you choose the sole tank, you'll need to specify which business or businesses the bank account primarily relates to. If you select the property tank, you'll need to associate the account with a specific property or properties. These allocations will impact the property equity forecast graph, but don't worry, you can adjust them later if needed. If you choose a loan account, you may also see additional fields to complete, such as the opening loan balance. The last step is to confirm the date range for importing. By default, transactions from the 1st of July in the prior financial year are imported to facilitate allocation across both financial years. However, if you've already filed your prior year return, you can adjust the starting date to the 1st of July of the current year to only import the transactions you need. Once you're ready, click Submit, and your bank accounts will appear on the dashboard. It may take a few minutes for your bank transactions to be delivered. Once they're available, you'll receive a notification, and you'll also see the number of transactions ready to allocate in the left menu and Reconcile button to ensure nothing is overlooked. We'll cover transaction allocations and bank rules in detail in our next tutorial. For now, let's return to your checklist and complete the final task. The Vehicle Logbook. Both the Work Tank and Sole Tank have Vehicle Logbooks. While they are separate, if you use the same vehicle and logbook method for both work and business, your combined logbook claims cannot exceed 100% to ensure accurate tax reporting. In this example, we'll complete the Vehicle Logbook in the Work Tank. When you land on the Logbook tab, you'll see a switch to select your method, either the kilometers method or the logbook method. You can switch between these methods at any time to maximize your deduction, but you must select one to start. If you choose the kilometer method, simply adjust the slider to indicate the number of kilometers driven from 1 to 5,000 and click Update. This action will also create the claim in the Expense tab and the associated tax summary. Keep in mind that while a logbook is not required for this method, you should be prepared to justify the claim if asked by the ATO. Alternatively, if you choose the logbook method, you must maintain a logbook for a minimum of 12 weeks. In TaxTank, you can either create a new logbook, enter trips from an existing logbook from within the past 5 years, or just adjust the slider to the correct percentage for your claim. To complete the logbook, enter your trips and specify whether they were for work, business, or personal purposes over the minimum 12-week period. If you enter trips spanning more than 12 weeks, the system will calculate the highest claim percentage within the entered date range. If your circumstances change in the future, you can easily update the logbook or claim percentage, which will automatically adjust the recorded claim for all allocated vehicle expenses or depreciation in the current year. That wraps up our onboarding checklist tutorial. Thank you for joining us. The forecasts you entered are now all visible on the dashboard, along with an estimated tax position to compare against actuals as you progress through the year. If you have any questions, please don't hesitate to reach out or explore our support articles and videos for further assistance.